All right, everyone, welcome back to another episode of Driving with Dave. And in this video, we are going to talk about risk management and leverage. One of the YouTube subscribers commented in the last video asking to talk about this. So, as I've mentioned, you guys could have your request. Just comment below on the requests you would like to talk about. It was Ghost Boogie. So shout out to Ghost Boogie for leaving that comment and asking for risk management and leverage. So as always, subscribe to the channel, give this video a thumbs up, comment below on what you guys think. And by the way, if I sound like a lisp or my speech is off, it is because I have this thing called Invisalign. So for those that don't know what Invisalign is, go look it up. It's basically in my mouth. So that's why I basically sound the way I do. I do not have veneers. I will have maybe veneers in the future. But I have right now Invisalign. I basically have Invisalign for like the next year and a half, 2 years. Sometimes you guys will see rubber bands in my mouth. It is what it is, So you got to invest in your teeth. Invest in your teeth. I know a lot of people in my life that have no fucking teeth or they got fake teeth. So, and it is what it is, But I invest a lot of money into my teeth. But anyways, talking about risk management and leverage. All right, well, very first thing, whatever broker you're using, obviously I max out the most leverage I can use. From, do I want 1 to 30, 1 to 50, 1 to 100, 1 to 500? I always go 1 to 500. That's it, right? I want as much as possible. Okay, that doesn't mean I need to go balls to the walls from a size standpoint. I will if I'm being aggressive. I'm trying to grow a small account. Like my last one, I did $1,000 to $23,000 in 7 days. And you can go look that video up. You can go watch that video of me showing a live account. Took $1,000 to $23,000 in 7 days. I was basically using max account, max leverage. From a risk management standpoint, some might say that's not great trading. Okay, well, congratulations. I'm sure that at some point in your life, you've been to the casino, okay? It's no different than me going to the casino, right? I go to the casino with $1,000. I can sit there at the blackjack table if I'm great at counting cards and run it up. Simple as that, right? It's no different with trading, right? If I come to the market with $1,000 and I'm good at it, I have a good skill, I'm good at reading the charts, right? Past performance, history, I can run the count up, okay? The difference from trading to the casino is that I have full control. I could choose when to get in the trade, out of the trade, take some of my profit off, take some of my losses off. Casino, you can't do any of that. So for people that are completely new to trading or currently trading stuck in a rut, right? I always recommend having the option of using 1 to 500, right? 1 to 500, but then your trades, right? You should take smaller size. If you're trading US 30 and NASDAQ 100, you need to take the smallest size possible with those, right? 0.01 lot, and then run it up to increase your position size as you grow the account. Same thing with gold. Take the smallest lot, 0.01 lot, and then run it up, right? Because you get more and more comfortable with position size. Now, every trade I take, right, it starts off, even if you have if someone's like, so someone said to me your risk management is horrible. I was like, what the fuck you mean? He's like, your risk management is 101. It's like, that's no fucking different than the casino. What are you talking about? I'm like, what do you want it to be? Like a 1 to 7? He's like, yeah, it should be a 1 to 7. No fucking trade. Nobody's signals, nobody's fucking trading style is a 1 to 5, 1 to 7. It becomes that, right? So every time I get in a trade, yes, I'm risking, we'll just use, for example, $500. Okay, I'm going to risk $500 to make at least $1,000. But if I get stopped out of the trade for $500 because of my stop loss profit, then the trade. You can never get into a trade. Okay, so let's fucking put our cards on the table here. No trade you get into, you're not getting into trade. You might get into a trade wanting a 1 to 5 or 1 to 3, but you can't bet on that happening because you don't know what the market's going to do, right? A trade, I might get a trade start off as a 1 to 1 or 1 to 2, but it might become a 1 to 7 because I let it run or I trimmed off small size. I'm trying to be transparent and honest with people as much as fucking possible. So, take it for what it is. But, the way I had the way I trade, and the way I trade, I learned from people above me, okay? And not from necessarily like an age standpoint, but more so from a experience and success standpoint. And I advise people to do the same thing, right? Whether it's from me or other people out there. I mean, shit, use your fucking eyes. Look at people who are actually crushing it, right? Look at people who are actually crushing it day in and day out. So if you see Bob, where he's putting up $2,000 to $20,000 a day, okay, cool. But does that line up with like what he's sending out there from a signal standpoint or a chart breakdown? Does it make sense? Does it like, okay, any asshole can just be like, oh, I made $5,000 today. Okay, well, what the fuck? Like, where did you enter? Where did you exit? Do you got proof showing you like entered there, or you got proof showing that, hey, I told all these motherfuckers before the trade even happened I was going to get in here. See, I had that background. I had that history, right? You can see it. You could line it up. Now, some people might be like, oh, well, you got in the trade and it, didn't go to take profit one, but it went to, your stop loss. Okay. So yeah, maybe it got stopped out, but guess what? I jumped back in the trade. Or, depending on the trade, I set my stop loss to break even. So I didn't lose anything. So from a risk management standpoint, anytime, to take away from this video, anytime you get into a trade, okay, I'm going to say this very slowly to wrap up this video because I like to keep these like 5 minutes long. Anytime you get into a trade and that motherfucker goes in your direction, your profit, you always want to adjust your stop loss, mental, hard, to either break even or some sort of small profit. It blows my mind how many people will they'll put a hard fixed stop loss at one, whatever their stop loss is, and then they instantly put their stop loss and their take profit out there, and that's it. It's fixed. It's either stopping them out for a loss or it's going to their take profit 3, and that's it. They never manage the trade, right? They never play with the trade, and that's what you have to do. Trading is all about managing your position, managing your trade. A lot of people don't do that, and they just get fucked. So from a risk management standpoint, guys, always remember to pay yourself. Always adjust your stop loss, and that's what I learned from everybody above me, cousins, uncles, brothers, sisters, everybody, is that always manage your trade and always pay yourself, even if you get off a break even. Guess what? If you say you take one lot on gold, and that trade goes in your direction, just say it goes to just take profit 1, wherever your take profit 1 is based on your chart analysis, and you close out half and you put the other half at break even, well, guess what? You still won, right? You still won. If you don't close out half and you put just the entire position at break even, right? You just get out of the trade for break even. Well, guess what? It was a learning experience. You still won, because I guarantee you most people lost in that trade. So that's it for this episode of Driving with Dave. I will catch you guys in the next one.